12:30 p.m. only on Bloomberg Quint.
Hello and welcome to this very special earnings edition on HDFC Bank. They have just reported their numbers. I'm going to run you through the basic numbers before we can go and connect with the analyst to get a view on the numbers. The numbers largely seem slightly below estimates. If you see the net interest income, it has come in at 10,800 crores as compared to a number of 11,100 crores that the analysts were working with. So 15.4% is the NII growth. Mind you, that is a multi-quarter low. To some extent, you could have the dip in the net interest margins, which could have weighed on that top line growth. Net profit has come in 18.2% higher at 4,600 crores. Again, slightly below the number of 4,786 crores that the consensus analysts number was projecting. So some miss there, and again a sub 20% growth as far as the bottom line number is concerned is what we are seeing again for HDFC Bank. Net interest margins have declined by about 10% sequentially. Again, that is in line with estimates, and that is again within the guided range of 4.1 to 4.4%. We did know some of the operating parameters which the bank had already shared in its business update on 9th of July. So loan growth has come in at 21.9%, and this time retail growth has jumped back because the wholesale loans have grown by about 22.7% in this quarter as compared to a single digit growth of 9.4% that we had seen in the previous quarter, when the management has actually spoken about some caution as far as the corporate book lending was concerned. So that has really made a comeback. Retail continues to grow, 21.6% growth. CASA ratio has come in at 41.7% versus 43.5% sequentially. So there has been some dip there, and that could probably have also weighed on the margins to some extent. Otherwise, if you look at the fee income growth, that has continued to remain at a good 23%. OPEX growth seems to be under control. Quality numbers, the gross NPA number has risen by 10.8% on a sequential basis in absolute terms. So the gross NPA number now stands at 1.33% as compared to 1.30%. So those are the key numbers. It does seem like the bank, the growth aspects have moderated to some extent. We do have with us Ashutosh Mishra of Reliance Securities, who's joining us on the phone line. Ashutosh, what do you make of the numbers you're first reading, and is this sub 20% growth as far as the profit concerned, a sort of disappointment to some extent?
Yes, the numbers have marginally below what we were expecting quarter, mainly led by the three major factors. One, definitely on NII front, there was a slightly lower growth. Second was the miscellaneous income on other income front has lower, and they have taken the mark-to-market hit of 391 crore and not utilize the RBI's dispensation of spreading it for the 4 quarters. So these three are the major factors because of which their results has below our expectation in this quarter.
All right, Ashutosh, but as far as the NIMs are concerned, they've seen a decline of 10 basis points on a sequential basis.
Yes.
Would you attribute that to some extent on account of the small drop that we've seen in the CASA ratio also sequentially?
No, not CASA ratio at this point of time, but more to, it will be towards migration towards the MCLR. Almost all banks has adopted MCLR last year, but this is the first time they are witnessing the increase in interest rate under the MCLR regime, and the major portion of their MCLR portfolio is linked to 6 months to 1 year portfolio. So only after 6 months the interest rate will get reset. So if you look at all the banks, major private banks which have declared result, has seen the NIMs decline because of this reason, and probably the interest rate transmission, whatever the MCLR hike they have taken in the last few months, will be more evident in the second half of the year. So margin depression is more towards that, and second is also towards the shifting of the portfolio. So now HDFC Bank is more focusing towards corporate portfolio. So when you move from the retail to the corporate, there will be marginal margin depressions from the high level of 4.5%, which they used to maintain earlier. Last quarter it was 4.3%.
Ashutosh, with respect to the gross NPA number, the ratio has gone up just by 3 basis points to 1.33% on a sequential basis. But if you look at the absolute number, there's been a jump of 11%. So obviously, the GNP number has seen a steady increase over the last few quarters. And in fact, if I believe, the management also guided for the gross NPA ratio to settle around 1.3 to 1.5% levels as compared to the previous 0.9 to 1% sort of a number that we'd been seeing for many quarters. Do you expect this uptrend to continue?
So given the current stress, especially in the SME and SME sector in the country, and the way Mr. Uday Kotak also highlighted in its analyst call, things will be a little bit challenging for this space, and the HDFC Bank is a slightly larger player in that space too. So probably that is the area where this fresh NPA is coming from. We need to hear from the management whether I'm right on the assessing of the same thing or not. But yes, there is a marginal increase in the NPA, but till you are generating a sufficient level of operating profit, these things are manageable. In the lending business, you will face NPA in a cycle at one or other point of time.
Right. Ashutosh, what is the slippages number that you have factored in your estimates for the quarter? In the March ended quarter, it was about 2,800 crores. So what sort of a number have you factored in, and what sort of a number would definitely be a big surprise to you?
We were expecting approximately 3,100 crores of slippage in this quarter.
All right. Ashutosh, hold on. We also have Avinash Gorakhsakkar, the head of research at Joinder Capital, who is joining us. Avinash, your first take on the numbers. Would you attribute the miss in the bottom line numbers largely to that MTM hit of 390 crores that they've taken in this quarter?
Yeah, exactly. I think, that was one of the reasons the markets or, our expectations of profit was slightly much higher. But I think, this seems to be a one-off, and hopefully if this one-off is not repeated in the coming quarters, then I think it could definitely, accelerate the growth ahead. And more importantly, HDFC Bank now seems to have, got a lot of cost optimization benefits. If you look at the cost to income ratio, it has come down to around 40-odd%. So I think going forward, investments which they have made in the digital space are clearly going to help them make more headroom for increasing operating profits and get more operating leverage, from new business segments. I would believe that, in such a kind of challenging scenario, this was expected, but I think the provisioning number is slightly higher than what the street expected.
All right, Avinash, last quarter we had seen the wholesale loan book lag the growth in the retail book. So you just saw a single-digit number of 9.4% as far as the corporate loan book growth was concerned in the previous quarter. That has jumped to about 22.7% growth in this quarter. So what do you make of this change in management stance? Because the last time they had warned of that they're being cautious about lending or making fresh lending towards some of the corporate loans, but this time around the growth seems to have come back. Do you think this is more to do with some NCLT opportunities?
It could be, because our sense is, one should actually monitor this growth on maybe at least the next 1 or 2 quarters before we can call it a secular uptrend. Because as you rightly pointed out, in the last time the management was pretty cautious on the growth from the corporate loan book segment. So I think this kind of growth definitely looks surprising, but its sustainability would obviously depend on whether, it gets sustained over the next couple of quarters. So I think clearly it would be better to observe, what the management commentary on this aspect is, because clearly this kind of growth was completely unanticipated.
Avinash, so where do you expect the gross NPAs for the bank to settle down? They've been trending upwards. We were just talking about that with Ashutosh. 1.33% management has guided for the ratio to remain between or settle down between 1.3 to 1.5% number. Do you see that of any concern?
Frankly, I don't think that should be a concern. But looking at the fact that HDFC Bank always enjoyed the best asset quality levels, these levels could look a little bit elevated from previous levels. So I think, if the bank is able to maintain the guidance of 1.3 to 1.5%, anywhere below these, projected numbers, I think that would definitely make the market more confident. But otherwise, even at levels of 1.3 to 1.4% cross NPA levels, I don't think, the stock would possibly get some sort of negative reaction. I would believe that, now since the QIP is likely to be made and fresh capital is going to come in, that would actually infuse fresh capital for the next lever of growth for the bank.
All right, Ashutosh, I'm coming back to you. What is your current call on the stock, your target price, and again on the back of these numbers, how do you think the stock is likely to react in the near term? And I also wanted to understand what you believe could be the next trigger for the stock, because valuations are around 4.2 times FY19 book value. So what is the next trigger that could really lead to some sort of a higher valuation multiple, because the stock already is trading at a record high?
So currently we have buy rating on the stock with a target of 2471, and we'll hear from the management and take our call, but most well we will retain our ratings. If you look for the trigger point from going forward from here, the loan growth remains quite strong. We understand that the depression, the slight decline in the margin is because of the transmission of MCLR to the end customers. And those things will be get sorted out, and industry is also evolving on MCLR front. So there's nothing much to worry about. This quarter result is mainly lower because of higher mark-to-market provisioning, and that is also the good accounting practice that they have taken it in the one quarter instead of spreading it out for the 4 quarters.
Right. So Ashutosh, we can attribute the miss in the bottom line to that MTM provision that they made during the quarter. But what about the net interest income growth? Because that at 15.5% is at a multi-quarter low.
So that's what the MCLR, what I was talking about. No. So the maximum of the MCLR is the MCLR loan linked to the MCLR are for the 1 year to 6 months. Okay, and the increase in MCLR has taken in the last few months. So that will be more get reflected in the NIMs somewhere in the second half of the current year.
All right. Yeah. Fair enough. And Avinash has already said that Avinash, is my understanding correct? You said that the stock is likely to react positively according to you on Monday?
Yeah, I think our sense is that, the markets would now start factoring the incremental fresh capital which would come in the bank, and that would be a big impetus, for the bank for firing on all the cylinders. So I think, that capital which is going to come in at a reasonable premium is going to boost the book value, and obviously, what we see as 4.2 times FY19 could possibly change once the fresh capital comes in. So I would believe that, if at all the stock, does open softly, it should be used as an opportunity to actually accumulate the stock.
All right. And Ashutosh, HDFC Bank, of course, had remained the darling of investors for the longest time. But, you also have these retail-oriented banks, IndusInd Bank and Kotak Bank, which have also reported numbers. So if you compare the three, and if you have to pick one out of these three, which would it be?
So if you look for these three, I will still continue to prefer HDFC and IndusInd. IndusInd, there will be a slight concern now arising because of the increase in the truck loading, the change in the norms by the government of India. Probably that may result into the hit into the truck sales, and probably their loan growth may come down in the coming quarter. But rest of all, I'll prefer HDFC first, number two is
All right. Okay, we also have independent banking analyst Hemendra Hazari, who's joining us on the phone line. Thank you for joining us, Hemendra. I wanted your opinion on what do you make of HDFC Bank numbers? Any numbers that you think are out of place or that you don't like?
See, the net profit number now is coming below expectations, because from earlier HDFC was looking at being 20% growth in earnings. Now we are finding that even that is rather difficult for the bank to report. So it just tells you the kind of stresses that are there, that even for a bank like HDFC Bank finds it difficult to meet that 20% earnings growth. And this really tells you that the situation in the broader economy is still very difficult. Now, the HDFC Bank's valuation continues to remain quite high, because when you have that type of valuation, I think the market's expectation should also now be considerably reduced, because such type of numbers, in my view, the valuation cannot be justified.
Right. So you expect this increasing trend as far as the key asset quality numbers are concerned to continue to rise for HDFC Bank as well?
Yes, that would be the case. You see, because that is the way the industry, the broader economy is happening. It is very difficult. And, I cannot blame HDFC Bank also for it, because that is the environment. I think the market should now start seriously looking at whether it justifies the type of valuation it commands in the stock market. The problem today is that there is no other alternative large cap, finance stocks. Everything, all the money that is dedicated for the banking and finance space, accrues to HDFC Bank, and that's what, keeps this valuation and the price to book at such high levels.
All right, Hemendra, thank you very much for your view on HDFC Bank, and also Avinash Gorakhsakar and Ashutosh Mishra. Gentlemen, thank you very much for joining us on this quick edition on analyzing HDFC Bank numbers. So, small miss coming in over there. Lots to do with the MTM loss that they have booked during the quarter. They've chosen not to defer it to future quarters according to the RBI dispensation that has been given to them. But gross NPAs do continue to trend marginally higher. But analysts believe that capital raise is something that is going to be the next trigger for the stock. This was HDFC Bank numbers. If you missed any of the numbers, you can always log on to our website, bloombergquint.com, and read our story on HDFC Bank. But that's all that we have on this special edition. Thank you for watching, and this is Bloomberg Quint.